Okay, so this is one from a little while ago, but I did get a chance to talk about it with you, so I wanted to bring it into the podcast. Are you familiar with Panacea Financial?
A little bit. I remember reading about it and trying to figure out what bank was behind it. And if
Yeah.
it was a bank that had just rebranded itself or if it was like truly a distinct neobank. And I think I remember it because it like made a lot of money one quarter. But the news
Yes.
you have is newer.
I have new news. Yes. So
Yeah.
Panacea Financial, which is a neobank, a digital bank that serves healthcare professionals. So doctors, dentists, veterinarians, got its start by helping those people refinance their loans, even going into last year of medical school or during their residency.
Yeah.
And then they've slowly been kind of building more of a full service digital bank for healthcare professionals, which serves both the individual, but also like loans to start your own practice, that kind of
Hmm.
stuff. So it's really focused on the healthcare industry, which Kiah, as you know, is a very popular industry within financial services, particularly like community banks and regional banks just love serving doctors, dentists, veterinarians. There's a very
If you
good
can
sort of,
buy it.
oh, it's really kind of a great market, right? Because like high income, generally a fairly stable profession. There are a lot of people who start their own practices, so there's like capital needs that they have. So it's a very like highly competitive space, and Panacea has, to your point, been very successful at building out a sort of a lending and then slowly over time a deposits business, working with those healthcare professionals. So recently, they raised a $24.5 million Series B round from Valar Ventures. And this is pretty interesting because A, that's a fairly big round, particularly for neobanks or niche
Okay.
neobanks these days. That's not like in 2020 and 2021, investors couldn't wait to give sort of
Yeah.
niche neobanks that were going after specific segments of the market lots of money. That's not true anymore. And so I think the fact that Valar signed up for this round is pretty indicative of the fact that they believe Panacea is pretty different than your
Mhm.
standard kind of niche neobank. And going to your point, the only other funding that Panacea had raised up until now was from a small bank based in Virginia, I believe, called Primus Bank. Are you familiar with Primus?
Okay, this is only in regards to trying to figure out if Primus had, because I think Primus had changed its name. It
They
had been,
had.
yeah, it was another bank in Virginia. I used to live in Virginia, so I was trying to
Yeah.
figure out what bank this was.
Yeah.
And then trying to figure out its relationship to Panacea, which is like,
Yes.
what's my job, by the way? Is me
No, yeah,
trying,
yeah, yeah. Well, and as we've talked about before, like banks have very similar names and lots of
yeah,
confusing structures. So it's totally understandable that you'd be confused. And it's kind of a unique relationship because Primus was the first and only outside investor in Panacea. And they were also Panacea's banking partner from a banking as a
right,
service perspective. And so all of the loans that Panacea were doing were being originated through Primus.
right.
Uh, and all of the deposits that Panacea has been gathering more recently have been sitting with Primus Bank. And what's interesting is going to your point about like the amount of money that Panacea has been making. If you go back and look at the quarterly earnings for Primus Bank last year, on those earnings calls, they talk a lot about Panacea. And in particular, there was this quote from the CEO of Primus that kind of stuck with me, which was that they were basically saying, hey, we could be doing double the amount of lending volume with Panacea if we could accommodate it through our balance sheet, but we can't. And so there was this sort of like
Okay.
very like constraint based way that they talked about it, where it's like, look,
Yeah.
our balance sheet doesn't really allow us to take
You have to
on
raise, the bank would have to raise more capital
exactly
in order to do more lending
in
to
order
grow.
to do more lending.
Yeah.
Exactly. Yeah. And so, and you know, and Panacea was driving like mortgage lending for Primus, and they were driving like a lot of low cost deposits for Primus. And so they were sort of spun up about as like intensely as it was possible for Primus to do. And what that suggested to me at the time was that the next step for Panacea is going to be figuring out how they can grow beyond Primus. And so, well, I
Yeah.
have got no sort of indications publicly that you know, they're planning to bring on more bank partners or do anything else. the fact that they've raised this $24.5 million seed round, or I'm sorry, Series B round, suggests to me that they are thinking about like, well, what does this business look like kind of grown up to the next level? And interestingly, the other thing that they announced recently was that they had hired Ryan Gordy as their new CTO. And his background is kind of interesting because he served in various tech roles at Seacoast Bank. He served as a consultant for a while at Ernst & Young. And then most interestingly to me, he was a fairly senior technology executive at KeyBank, which is also another one of these regional banks that has made going after doctors, dentists, and veterinarians a very key part of its strategy. And so I'm very, very curious to see what this new CTO, what this new round of funding, and what this sort of really seemingly very strong digital bank serving this industry, what they're going to do sort of growing beyond this initial kind of unusual relationship that they have with this one community bank that was both their investor and their banking partner.
Okay, this sounds so dumb, but like I thought Panacea was like a digital brand of the bank, and I didn't realize it was a separate neobank like entity from Primus. Like,
yeah, no, not dumb at all. And no, it's not dumb. And even like on their website early on, I don't know if this is still true, but when I was looking at them, Panacea had a thing at the bottom saying like a division of Primus Bank.
Yeah.
And so it very much did look like that. And I've gotten to know some of the folks over at Panacea over the last like 6 months, and they clarified for me, and this recent funding round sort of suggests that this is true, that even though it said a division of Primus, and they were obviously working very closely with Primus, that the ownership structure is they're not owned by Primus. Primus is one investor, but it's a separate company that is now kind of growing up and growing beyond Primus. So it's kind of, I don't know, I haven't seen a whole lot of examples of, obviously there are banks that will invest in fintech companies, but a lot of that investment either is a big bank like Capital One or something that has a ventures arm that like invests in fintech companies, or it's smaller banks that collectively invest through a separate company like Bank Tech Ventures or Canopy Ventures or whatever. Yeah, and I rarely have seen a community bank invest individually by itself in a fintech company and then also be the banking partner of the fintech company. That's very unusual.
Again, I just think like, well, why didn't you just stand this up as your own bank brand or acquire? It is interesting that, you know, I would say that this is like a material relationship for the bank that
for sure.
Invested in the company. Yep. They accept the deposits from this company. They make the loans of this company.
Very dependent on this company, I would say. Yeah.
To think that like Primus is either going to raise this capital to make loans, ? And then sell them.
Yeah.
Sorry, Panacea would use this capital to make loans.
Yeah.
Or Panacea like now needs to expand their banking relationships because they can't. They're
constrained.
Problem, but and that's just it's just a little weird. And I to me it's like I think it's a really good business model, and I'm kind of surprised that Primus doesn't just want to acquire it and then become this bank. But it kind of makes sense. It'd be a monoline or there'd be a concentration risk, but it's a strange arrangement. I've always been interested in the banks that start fintechs and then spin them out.
Yeah, which is not uncommon, right? Because like Live Oak Bank has done that a few times with various things.